Sure. Hey, everybody. I'm Peter Kim, and many of you know us through Curbside here. Just so you know, Curbside was one of the very first businesses I ever founded. I've been passionate about it because I had a challenge when trying to buy my first home out of fellowship. I thought it'd be an easy process, something where people just let you know you just let me know where to sign and I want to buy a home. I found it extremely difficult to navigate the home buying process. Felt like nobody told you about this, nobody taught you about this. And I found out that there are specialized products out there, loan products. And also from an agent standpoint, there are agents that specifically understand your needs a little better. You put those two things together, and if you have the right team behind you, then you can make the whole process a lot smoother. And so that was kind of the genesis of Curbside. I wanted to create a service to really help physicians, high net worth individuals, particularly get into homes, and we wanted to do it for free. And that was my big challenge. Can I do this in a way that provides all this value really just to help people out there? And also out of it, we also wanted to do something good. So for those of you that may not know, over time, what we've done is every transaction, we use some of that money to do some good in the world. And so what we've done in the past is we've built orphanages for kids over in India. We've built homes for the homeless in Central America. We try to do all of these things really to create this ultimate win that I believe is absolutely important whenever you do any sort of business, which is make sure the client wins, make sure that society and community wins, and everybody wins overall. And so that's what we really wanted to do. And that's always been our mission here at Curbside, to help physicians, make it an easy, smooth process for you, and I'll, again, do good in the world. So can you go back to the very first slide? I just want to make sure. So today, we're going to talk about how to buy a house in this market. This is something that we're passionate about. We talk to so many people, hundreds of people every single year, physicians that are maybe at the early stage to maybe their second or third homes. We talk about buying homes, and we've been doing this now since, technically 2014. So it's almost been 9 years. We've been through a cycle up, cycle down. Like, we kind of started at a low point and then up and down. And so things have changed quite a bit. And so what we wanted to do today was give you a little bit of an overview of the market, let you know what's going on, let you hear about some of the things we're doing. And then we are going to answer some questions if we can. I think Deb has already gotten a few questions, but if any of you have any questions, can't promise we'll answer them all right now because we've got so many already, but just go ahead and put that in the chat as well. If something kind of, as I'm talking, comes up in your mind, go ahead and put that in the chat as well. So next slide. So I wanted to give you a quick overview of what it looks like in the market today. I don't think it's any surprise that interest rates have risen quite a bit. I think everybody knows that. The Fed is doing a lot to try to curb inflation. A lot of the inflation that is caused as a result of everything from the pandemic to all of this run up over the last bull market over the last 18 years. Whatever it is, the Fed is trying to really curb inflation. And one of the most powerful levers that they have to do that is to raise interest rates. Now, that doesn't just cause issues in the residential home buying process, in the commercial, business, lending. There's so many different areas where that causes an impact. But for the sake of this talk, we're going to talk about how that impacts us as buyers, or even us as sellers. Maybe some of you are sellers out there. So the 30-year fixed mortgage, the most recent one, we put this number here, 7.23%. Now I'm going to show you some of the mortgage rates have gone to. Now, this is one of the highest mortgage rates, interest rates that we've had for quite a while. The thing is, the market's not always behaving exactly as we thought it'd behave. When interest rates go high, a lot of times, usually prices will adjust and things like that. But we found that median home prices have they continue to increase. They've reached pretty much this milestone of over $400,000 in 2023. And home buying, though, overall has slowed down as home prices have gone up, as interest rates have gone up. And usually in some ways that if that curbs demand a little bit, usually prices come down, but we haven't seen that really in the market today. And so we're going to talk about that. We've had limited supply out there, meaning that there are a lot of people, and again, I might mention this in some of the other slides, is that a lot of people are locked into these low interest rates. I myself have a sub 4% interest rate. A lot of us don't want to move. We don't want to move. So that freezes the current supply. New construction is still coming on board, but it's slow because of, again, it takes a few years for these things to build up. As a result, we've got demand, but not a lot of supply. And if anybody knows any, standard macroeconomics, that usually means that prices and prices usually tend to stay up, even though, again, we expected something different with interest rates. Competition is still pretty fierce. The next slide. This is just a graphical representation. You can see our interest rates, the 30 and 15-year fixed rates. Look at these things. Look at the numbers. We've seen some ups and downs, as normal can happen. Over the last couple of years, I don't think anybody quite anticipated interest rates rising this fast. But again, the Fed chairman, Volcker, I mean, well, Powell, he's looked at Volcker in the past, one of the former Fed chairman, and he felt like in the past, the best thing to curb inflation is to be super aggressive with interest rates. And so that's what you're seeing right now. And it's causing ripples all over the market, whether you like it or not. And unfortunately, for buyers that are coming out right now, this is what they're seeing. So next slide. And so this is the median sale home prices in the U.S. You can see that all the way back from, 1970s. Prior to that, of course, things are going to go up over time, right? We expect prices to go up over time. Inflation is cumulative. Let's say it's 8% one year and 3 or 4% the next year. It doesn't mean that prices have gone down. It just means that inflation is still going, but maybe at a slightly lower rate. Now, we know what happened in the blips between 2008 and 2010. You can see that downturn. Even there was an early blip around 2020 when that was a pandemic. And now you can start to see prices, maybe they're dipping a little bit, but again, they're all really maintaining that high median sale home price. And people are wondering, like, what is going to happen next? And we're going to talk a little bit about that. So go ahead for the next slide. I'm going to go ahead and introduce my partner, Dr. Sue Lee. Dr. Sue, but you know what? Her husband is a physician. A really good friend of mine. I've known Sue for a while. She's one of my partners in this business, and she's going to go ahead and talk a little bit about kind of what the market looks like today for physician home loans. And I'm going to let her take it away.
Sure. Thanks, Peter. Welcome, everyone. It's fantastic to be here and be able to finally do something and, hopefully provide some value for some of you out there. So, with everything that Peter said, basically it boils down to what does that mean to me, right? So, you may be in training, out of training, a few years out. I mean, folks are, at various different points in their careers. And so, with the rates the way they are, what we're seeing is physician home loan rates are, in the mid to high sixes. There may be discounts with banking relationships, deposits, bringing in investments, that sort of thing. So that's definitely something that, when you are speaking with your lender, you want to inquire about. Most of the lenders, in the physician home loan market are remaining, so they're not exiting. But what we are seeing is that they are starting to tweak their loan programs a little bit. And what that means is they're trying to, they're trying to bring down the risk, right, associated with some of the loan offerings that they're putting out there. So that could mean, removing the 100% financing option, having minimum credit scores a little bit higher than, maybe where they had them a year ago, reducing the amount of money available for physician loans. So, those are some of the things that we're seeing. But the good news is that, if you've been, taking great care of your credit scores, you're, starting to save a little bit of money, that sort of thing, the physician loan space is still very, very healthy and available for those who need financing.
Now, Sue and Deborah, we talk, all of us, we talk to about hundreds of physicians on a monthly basis, actually, about these issues. So, and these lenders, and we're connecting people, holding people's hands throughout the entire process. So we actually have honestly, a unique vantage point over all of the physician home loans. We're not just one person looking at one loan. We're looking at hundreds of loans in different areas of the country through different banks, and we're constantly seeing the landscape change. And so this is what we've seen, and this is what we brought out in the market. We're going to talk about some of the predictions that we have and other people have for where this is headed in a moment. But I want to kind of talk next about kind of navigating the current market, right? People think that the housing market, again, I don't know if it's a recovery period. Okay, I don't know if that's exactly the way to say it, but that's what we're saying. Is that the housing market right now, depending on what side you're looking at it, whether you're a seller or a buyer, you're looking at it as a tough situation, meaning that a lot of things are frozen, prices are high, and it's a tough situation for a lot of people. Lenders are letting us know. They're asking us, do you know anybody who needs a refi? Do you know anybody looking to a home? They are calling us because of the high interest rates, things are frozen. Things have just screeched to a halt at this point. So not much is happening. People are now anticipating eventually, once this shakes out, once now supply comes online a little bit more, once the market is kind of set for a little while, eventually there will be people who need to get out of their house, maybe it was a short-term rental that they had, maybe it was an institutional company that held a lot of these single family homes as an investment. Maybe there's some people that eventually need to move. Eventually, movement will happen in the market. And especially with, I don't know if you've seen what's happening over in China right now. Their economy is having a ton of issues. Could that shake over into our economy? Meaning that could it affect the stock market? And when it does, will that impact home prices as well? Because people need that liquidity, they need that cash. And so we've actually just put a few people that we respect that we think have great have great track records in the past of showing what's about to happen. Danielle Hale, Realtor.com. She thinks there's going to be a decline in homes for sales, which eventually, like I said, will affect sales. Right? She maintain high prices, but there are other people I'm going to show you later on that think that actually prices might be affected. I mean, Lawrence Yun here also thinks that the housing recession, that prices will maintain and stay high. Now, I have my predictions. I don't know if you have your predictions, and we'll talk about them shortly. Next slide. Okay, that same person, Lawrence Yun. He thinks that interest rates are at 7%, right? But he thinks that over time, things are going to get lower. I think it's going to get lower as well, personally. Now, I hate to make my own predictions sometimes because, again, you find yourself later, you eat your own words. But at this point, they anticipate that the Feds maybe will do another raise or two over just to curb inflation, but whatever they're doing is working. The numbers are coming down. Maybe it's not hitting that magic number of 2% that they want, but it's hovering around 3 or 4%. Eventually, there's a lag effect where they raise interest rates. Eventually, inflation does go down, and they think that right now we're in a little bit of that lag, meaning that they're going to keep raising to be aggressive enough, but they don't want to be overly aggressive to plunge us into a deep recession. But at the same time, they know that it's going to take a little time. So they know that eventually, I'd say over the next year or two, maybe it's going to be 12, maybe it's going to be 18 months, maybe it's 24 months, that rates are going to come down. I think we're going to have to see that in the market for things to change. We also think that there were so many, especially over the last couple of years, there were so many adjustable rate mortgages out there, meaning that people were, because of the way people predicted that interest rates would continue to drop or go down, people were willing to take a little bit of that risk and take those shorter loans. Now, because of what's happening, people expect a little bit more of that movement towards those traditional long-term locking in, because people are now, they're a little bit scared about what's happening in the market. And they, again, this is another person over here. I always call it DNS here, is what I call her. She anticipates rates are going to drop to about 6% by mid-2024. I don't know what's going to happen. 2024, that's about, I would say, that's about 8 to 10 months away. They think it's going to drop to about 6% from 7%. Now, I'm not sure. I don't know what you guys think. Do you guys, just left to hear in the chat, do you guys think that you're going to see interest rates drop at least within the next 12 months, or you think it's going to take longer than 12 months? I'd love to hear what your opinion is. Put in the chat box. Do you think for interest rates to drop, it's going to take more than 12 months, or is it going to take less than 12 months? I'd love to hear. Throw in the chat. I see people throwing stuff in there. Okay, next slide. Okay, so I actually want to turn over to my partner, Sue, here, because she works with a lot of people when they actually want to go and buy homes. She's going to talk a little bit about some of the tips that she sees in the current market that she has. So, Sue, you want to take that over?
Sure. Yeah, so it's been a tough market, actually, I would say probably for the last 10 years. And I mean, every period has its own challenges, whether it's not enough inventory, too many buyers, whatever it might be. And the current environment is no different. So like Peter said earlier, low inventory, still many buyers out there, higher rates impacting affordability. So, what are some of the things that you can do to put yourself in the best situation, right? So I think first and foremost is be flexible. Consider moving maybe 2 blocks away from your ideal neighborhood. And, maybe that'll save you $50,000, $100,000. Consider, maybe compromising on some of those must-haves, on your checklist. So maybe you do 4 bedrooms versus 3 bedrooms, or 1.5 baths versus, whatever it might be. So be ready to compromise, on some of those checklist items. You also want to make sure that you are prepared financially, so that when you do come upon that perfect house, your offer gets accepted, that you don't do anything to make sure that that deal goes awry. So make sure that you review your finances. If you have a CPA, if you have a financial planner, sit down with that individual and go over your finances. Start gathering your documents, savings accounts, retirement accounts, 401ks, pays, all of that. Start gathering all of those and really start keeping an eye on your credit score. So you want to make sure that there are no errors. A lot of people don't check their credit scores, and when it comes to applying for a mortgage, find out that there was a utility payment from 6 years ago that was sitting there that was bringing their credit score down 50 points. So you want to make sure that there are no surprises when you get into contract on a home or you're ready to put an offer on a place. Definitely want to partner with a reputable and experienced real estate agent. And I would say, one that is definitely well versed in working with physicians and how physician loans work, if that is the type of financing product that you intend to use. And there are a few reasons for that. So number one, realtors who work with a lot of physicians understand that doctors are busy. Right. My husband leaves for work at 6 o'clock in the morning, might not be home until 7 p.m. at night. So I think that, they need to understand that they need to work with your schedule. So that's the first thing. And then the second thing is, a lot of realtors who don't know about physician loans and how they work get really spooked. And not only that, they don't know how to integrate that into the whole offer process. So a lot of times when you're going up against, maybe 3-4 other buyers, and your realtor doesn't know what they're doing, and they just kind of slap together an offer, you want to, if you want a home, you want to put yourself in the best position. So an experienced real estate agent will basically present your offer just as good as any other offer. Hey, the financing might be a little bit unique, but you know what? Money is money, right? So you definitely want a confident, experienced real estate agent that knows how to integrate those physician loans into that whole process. And then also, for first-time home buyers, you want to choose an agent that has experience with all sorts of different markets, that can kind of handhold you, right? Explain to you, take the time to explain to you. Because I do find that, a lot of these quote unquote top agents who work with multi-million-dollar buyers, they're not going to give you the time, that a realtor that works with first-time home buyers typically will do, and take the time to explain and go through that whole process. Next slide.
All right, so we're getting near the end here. I think the big thing that we want to talk about, and really wanted the key points, okay? The key points, again, if you have any questions, by the way, go ahead and start filling them out here. I see some people dropping some comments, which is awesome. We're going to try to address as many of those as possible. The market's changing right now. It is a weird time, something that we've actually probably never seen so far. Obviously, our business has been around for however many years. Let's make sure that we're on the speaker view here. Can you make sure I'm spotlighted too as well? I don't know if you can do that. But yeah, this is a unique time for us in the market. We've never seen it where we've seen such high interest rates, high prices. Am I spotlighted as well too, or not? I am? Okay.
Yes.
I can't see myself on that. Okay, perfect. Yeah. So it's a weird time. I mean, some people think home prices are going up, home prices are going down. But how can we position ourselves as home buyers? I'm curious out there. I don't know if we have a poll function in this, if we can do it or not. But how many of you are actually thinking of buying a home within the next 12 months, I'd say? Are any people buying within 12 months, 24 months, 36 months? Just go ahead and put a number there within 12, 24, 36. I'm trying to figure out what the pulse is of people that are here. And so 6 and 12, good, okay. So there are some people here. So it's a unique time. And I would say, things are a little bit frozen in the market, especially if you are a cash buyer, obviously, you're not going to be impacted by the interest rates as much. However, I will tell you that, again, demand is still strong overall all across the country. Some of us think that with interest rates, there you go. Hey, with interest rates going on right now and everything that's going on, that for a little while, we're going to see some elevated home prices, but eventually we're going to see them decrease. Now, the thing is, like, competition changes all throughout. There's always going to be competition. I think us as physicians who have current, income and strong credit, strong lending, just know that whenever we get in the game, we can get in the game. We can always refinance those loans as we go. go through time. I mean, that's the thing. As long as we have strong financials, that we can continue to do so over time. And eventually, a lot of us will have that opportunity to get into homes now, in what we consider a better market for us, I think, eventually, with the financial means to be able to buy some of these properties. Make sure you find a good agent. That's probably the big thing. That's something we can absolutely help and connect you with. Watch over the entire process. And then, of course, like, you got to shop around a little bit for your lenders. Shop around, because not every product is exactly the same for every single person. Some lenders will be better with your situation. Some others, 1099 versus W-2. And that's something I think Sue and Deborah talk about all the day with people. And so, if that's something and you're not sure about your particular situation, we're happy to talk about it with you. So let's go ahead and answer some questions, Deb, that are out there. Do you have some questions that you want to to us?
I do. So Dan's asking, my biggest concern is getting underwater on the loan home value, but our expectation is to stay in the home for at least 10 years. Am I overly worried about this?
Yeah, no, I can understand that concern. The whole rent versus buy situation, of course, that's probably where it starts, right? Understanding what position you're in, why you're buying a home, where you're buying a home versus rent versus buy. I think it's something that we stress quite a bit, is even though we're in the business of trying to help people buy homes, we also want to make sure it's a good time for you, meaning that it makes sense from a market standpoint. It also makes sense from where you are from a financial, and then also from a career standpoint. I tell people, I think that, I don't know if you're like me, but you feel like if you're early on in your career, that you feel like it's kind of a rite of passage. You finish your career, you finish your training, you finish your practice, you start getting stabilized, become a partner, maybe what it is, and you buy home. And that's just what it is. If you're in a position where you feel like there's still some uncertainty as to, there's some transition that could happen, when you're forced to sell, that's when you run into issues with being underwater, financial, this kind of thing. But if you're planning on being in your house in the long term, and you're like, long term is what I mean by usually 5+ years, you'll be able to weather kind of market conditions. And I think that, again, if you look at most places in the country, and there are a few areas maybe that, in certain markets and certain areas that probably you're not living in, to be honest with you, that have shown some issues with price over the long term. But I would say most areas with good school districts, with a good demographics, with a decent economy, and which is, again, a decent area to live in, which is probably where all of you are looking. Over time, it's been shown that if it goes in line with, at the very least, it goes in line with inflation over time. So it's great. It's the great inflation hedge is what they call it. Home prices go up, but that's usually because inflation goes up. And again, part of inflation, the metric is actually taking into account home prices. So it's kind of all integrated together. So it goes up with with inflation. And so it's hard to say. And I could almost put the bet on it for anybody willing to stay in their house in 10 years, for that home to not be to be in a situation where you're underwater. That's not likely, I would say. And especially if you're paying your mortgage over your time, and you're also paying off some of the equity for 10 years, and the home prices itself, is probably not likely. Now, you have to understand why you're living there. If you're living there because you want to, again, it's an emotional thing, and it's going to be stable for your family, and it's going to be a benefit, I think that's a pretty good bet in your favor. Sue, do you have anything to add to that, or maybe Deborah?
Yeah, I mean, I want to add to that. And, basically, if you have typically a longer than 5-year time horizon, markets go up, down, sideways. It's impossible to predict in the short term. But the biggest mitigator of risk, whether it's real estate investments or whether it's the stock market, is really time. Right. So if you compress that time, you don't know what's going to happen tomorrow. You don't know what's going to happen 6 months from now. But, pretty good chance that over 5 to 10 years, you're going to be at least even, if not, have appreciated over that time. So I think, to answer Dan's question directly, I think 10 years, pretty minimal chance that you're going to be underwater. That's not to say, anything can happen, obviously, in this world. But even looking back at 2008, the whole financial crisis, I think, there are some places where home prices in LA, in different parts of the US where, I don't know, we saw more than 50% declines. And I would say within 5 years, most of those markets recovered and then some.
Mm-hmm. So tell us a little bit about your background, just so people know where you're coming in from this. I know now you're an expert in all things real estate as well, but you also have a financial background as well. So that kind of helps give you some perspective here.
Right. So I started so I have a financial planning background. I started back in 2000. So everyone remembers what happened in 2000. So I've seen a lot of different markets. I think, yeah. So, with that being said, I keep track of interest rates and stock markets and the real estate markets, and everything is all integrated. Right. And I think that, people tend to overthink a little bit. Do I time it here? Do I time it there? But I think the biggest thing is it just has to be the right time for you financially. We could be at 30-year highs, we could be at 30-year lows, but even if we're at 30-year lows, if it's not financially comfortable for you to purchase at that time, you have no business purchasing. So I started as a financial planner back in 2000. I quote unquote retired when my son entered kindergarten, because someone has to chauffeur these little people around. And I was actually looking for a nonprofit to work for, and Peter was telling me about this thing that he was doing, and it was like kind of a right time, right place, right opportunity. And so, chance to put some good out there, chance to utilize my financial planning background. I'm married to a physician. We use a physician on the first two homes that my husband and I purchased. So, I understand all of these things, and I think it puts me in a pretty unique position, when I'm talking to folks. Hey, I've been there, done that, but also, with the backdrop of understanding the macro picture of what's happening in our economy.
Cool. Thanks, Sue. Hey, Deborah, I'm going to ask you this next question. Make sure you're spotlighted as well, too, by the way. This is a question from Chatty, it looks like here. And the reason I'm going to turn this over to you is for a reason. What questions should I ask a realtor to ensure they can guide me through this market? They always seem to quote their years of experience, but that doesn't necessarily mean they can navigate the nuances of buying a house in this market. And so this is somebody that can actually speak from experience. Deb, quickly give your background in that, and then go ahead and do your best at answering this question.
Yeah, absolutely. So I am in the Dallas-Fort Worth area and served in the corporate world in operations for 20 plus years, and then decided to get into real estate. So I am a realtor in Texas, and had the opportunity to come alongside Peter and Sue and help curbside operationally, as well as provide a little bit of real estate background. So, Chatty, you're right. Like, a realtor can say, I've been in business this many years and sold 3 houses. So the first thing I will tell you is make sure you connect with that person outside of questions. It is a relationship. Buying a house can be stressful, and you want somebody who is going to communicate with you well, that you are going to feel comfortable with, that you are going to trust. So number one, I say, make sure that you feel comfortable with that person, you communicate with them easily. If you are a more direct type person, don't get somebody who's not direct, because when you want questions answered, if they're not able to go do that for you, it's not going to be helpful. But as Sue said earlier, working as a physician, you need somebody who understands your lifestyle and understands how to handle the physician home loan. Because if you don't present it correctly, a seller may not hear the benefit. They may just hear, oh, this is going to be a different type of loan. So those are the first two things: relationship, and that they've worked with physicians. Your schedule is crazy. Your time is precious. And so make sure that they understand that. The other thing is do they understand the area that that you're looking in? They may, in the area that I'm in, there's tons of different neighborhoods and areas to be in. So I don't want someone from the Fort Worth area trying to sell me a house in Dallas, because they don't know it. So make sure they know the area. Make sure they're on top of the trends. Use the information that you've learned today from us to say, do they really fully understand what's going on in the marketplace? Do they understand where what the selling looks like in those neighborhoods? Are the houses getting tons of offers, or are they not? Things like that. Those are super important. I think those would be the most important things for me. Sue, Peter, would y'all add anything to that?
Sue, you want to do it?
Yeah, I mean, I would add, and I think I touched on this like a little bit earlier, is there's always that one guy who's the $1 million guy who, sold all the homes in the whole entire area. I would typically steer away from those folks. Actually, obviously you want to, get a trusted referral, maybe talk to some of your colleagues. If you kind of, some people like to be private and, maybe don't want to tell the whole world you're buying a house, talk to someone like us. We can certainly connect you with realtors out there. But, if you're not comfortable doing that, then actually, open houses, typically those realtors are willing to work. I mean, those aren't easy hours. They're there picking up, putting out signs. They're talking to people. Those are going to be your hard workers. So, interview them. You could now these days you can go on all sorts of different tools and look at how many transactions they've done. So, you don't want someone who's doing like 30 transactions a month because yours is going to sort of get lost in the shuffle. But, enough transactions where they're successful, they've been in business for a good number of years, but they're also going to put the same care into your transaction as anyone else's.
Right. I mean, that's what we do when we try to curate our list of agents. And now we have agents all over the country in all sorts of markets. And you can't believe the smallest markets sometimes we're in, because people are in physicians and doctors and dentists, and all of us, we're all moving to these really, not just to the main cities, we're moving to remote areas, nice family areas, places where the needs are. And so we have an extensive process that we go through before we vet anybody. And, we really recommend everybody go through this process if you want on your own. But, we talk about the years of experience. We talk about their background, different types. We go through their transaction history. We make sure they're comfortable with that area. What's the last transaction they've done there? What have they been able to do, or how they exhibited kind of adding value to their client before in the past? We try to understand their incentives and kind of ultimately the way they work and the reputation in that market. And so we recommend everybody do that as well. Just like you would for any sort of investment, make sure you do your proper due diligence on your agent. And of course, it's nice to have a referral too as well. Somebody that you either know or trust or something like that, who's worked with them before, because that provides a little bit of layer of accountability. And that's kind of, again, a big reason of what we do is that we make sure we provide accountability at the end of the day. So, somebody make sure they do a great job. And that's what comes with reviews and referrals and things like that. So this is a great question. Deb, do you want to keep going?
Yeah, I have another question. So this is a two-part question. Brett says, it is one thing to have 7% rate in the Midwest. It's another to have that rate in a higher level of care area, like many people on this call. Are there different strategies based on the cost of living area? That's question one.
You mean with that interest rate?
Mm-hmm.
That's what he's asking. I mean, again, I think that the market in certain areas will be big. It's basically, real estate's local. They say at the end of the day, real estate is absolutely local. Interest rates are just a tool, right? And interest and banks are a tool to help you get the property, whether it's in LA, whether it's in Dallas, smaller areas or that. And so I would not worry. I think everybody's strategy overall is the same in terms of, can you afford the home? Like, you start there. Can you afford the home with the current interest rate in that area? Does it make sense? And I always recommend to people, don't always just buy the biggest home you can buy, because I think a lot of us are trained that way. You go to a lender, and they're going to tell you, well, you can, we'll lend you X amount and you can buy a $2.5 million home or whatever. It doesn't mean you should buy a $2.5 million home, whether you're in LA or not. Wherever you're at, I would say, figure out how much you're willing to spend or how much you're willing to invest in that property for your area. Interest rates will play a role. I know that they'll go down over time. But I would say overall, the strategy is probably the same. You're just going to get different numbers at the end of the day, but you have to look at that number for you, your salary, what you're doing, and see if it makes sense. Now, we're kind of unique for a lot of us is that in different businesses, high cost of living equates to higher standard, higher salaries. Unfortunately, it doesn't always work like that for doctors. Like, it doesn't make sense. The more desirable an area, sometimes our market prices, our salaries are lower, and it's kind of weird, and it doesn't seem to make sense. And so that's why sometimes we get stuck in a worse situation when you're in a high cost of living area, because we're trying to keep up with everybody else. We want the nice home. We don't probably, again, our salaries are lower in some ways, And so that's a trap that a lot of us get in. Next thing you know, you're on the hamster wheel and you're just basically working to pay off that mortgage. And that's something that we really want to try to help people avoid as well in that situation. So it's good to look at your whole portfolio and everything you're doing holistically. Sue, do you have anything to add to that?
Yeah, no, I think that's exactly correct. With everything that we've talked about in the current interest rate, environment, competition, home prices, bottom line is it's your home, right? Market goes up, down, sideways, you're probably not going to sell. If you're concerned about the rate, find that mortgage payment that's comfortable with your current salary, right? And if rates do go down, hey, even better, right? Even better. You can refinance and you'll have a few more dollars to contribute to your college savings, retirement savings, whatever it might be. Or maybe it puts you in a situation of being able to afford a better place, or maybe you've saved up some down payment, but do what's comfortable financially for you at that time. People can put all these predictions out there. They may or may not come to fruition, but ultimately, whether they do or not, it shouldn't impact your lifestyle or you material in that way.
All right. And then one other question from Brett. He said, while these are the highest rates I've ever seen, while watching a TV show from the late 80s last night, they were bragging about an 8% rate and they would never sell. Are there any lessons from this longer term view?
Yeah, that's a great question. Teens, like interest rates in the teens are probably what they had in the 80s.
Mm-hmm.
I would say a lot of things have changed in the market where it'd be hard to, again, a lot of his perspective during that time, that was actually tolerable. Like it was like kind of the market expected, things were higher. Now people have been fed and they've gotten really kind of fed and used to lower interest rates. And so what can the market bear? At a certain point, things do break, meaning that home selling, home buying, this kind of stuff. And back then, maybe 8%, it gets all relative, was lower, and they were able to do that. So do I think that we'll be in the teens anytime soon today? I don't know. I think times have changed. I don't think you're going to be able to see it in our current market with the amount of debt that people have on board, with the type of financing that we've been used to, with the economy being where it is. I don't anticipate that we'll see those type of interest rates. However, what it does give you and tell you in terms of lessons is that these things fluctuate quite a bit. Okay. And so things will move. And can you be opportunistic during when times move to be, to take advantage of that? So if you're in a locked, mortgage rate, things go down. Can you make sure you stay on top of the market to be able to, if it makes sense to refi? If you think it's going to be higher later on, this is probably a good time to lock things and get in if that's really concerned and you're worried. But other than that, I think the biggest lesson for me is when I see stuff like that, first of all, it gives me some perspective, like, oh man, like it was fine. But again, home prices were different then. Home prices and affordability and things like that, and the amount, like you hear about it now per, home prices have risen so much faster than our salaries and incomes have. And so it's hard to think that we could ever get back to that place without the whole system completely breaking. And we're, a lot of us we're already feeling like that. And so I think that people are anticipating and expecting that because of affordability, when you look at these prices, homes prices will have to come down at some point. Not sure when that is. Do you guys want to add anything to that?
No, I think you're spot on.
Yeah, I was just going to say, I remember my parents when they refinanced in the 80s and they were like home run at 7%, right?
Yeah.
And so again, I think that just highlights the markets are unpredictable. You have to be in the best situation for that time and not put yourself in a position of being in a worse situation later on, right? That it can only get better going forward.
When I talk to people about their homes too, I remember every time along the way, even myself, every time people bought a home, nobody's ever said, well, I don't know, maybe you bought it in 2008 at the worst crash, but I've never heard anybody say, like, when they bought a home, for most people, they're like, oh man, I felt like it was so cheap at that time. Everyone, those people feel it is very expensive. It is. It's the biggest investment of your life. It's a lot of money to put down. But I think most people over time, if you've been in it for a while, and like I said, like Sue talked about the longer time horizon, time fixes and minimizes risk. everybody who got in earlier and held it for a long time is like, I'm glad I got in when I did. It's just the nature of the way the game goes. The inflation goes up, prices go up over time. And so, yeah, I think that's probably the big takeaways from that.
Okay,
Well,
so
time for one or two questions more, and then
we just got a couple of minutes left. So Julia wants to know, can you elaborate regarding W-2 and 1099?
Oh yeah, W-2 and 1099. Okay. So again, many W-2 people out there are employees, so they get paid a W-2 by their employer, and 1099 oftentimes you're kind of like your independent contractor. A lot of physicians in private practice, even for me, my anesthesia group that I came out, I originally had 1099. We were all grouped under one umbrella, but we each got our own 1099. The way that lenders look at these types of income, it's a little bit different. Again, they're looking from a risk perspective. When they see a salary in a W-2 and it's a set, they know that every single 2 weeks, you're getting paid this amount. And there's some level of commitment to you as an employee that they're going to pay this much. It's easy for them to extrapolate and say, all right, this person is going to make this much over the next 6, 12 months, year, whatever it is. And it impacts your ability to pay because they want to make sure that this whole debt to income ratio is in line, meaning that you're not overexerting yourself to pay this for this mortgage. And so for W-2s, it's very easy. When they look at the W-2, they can make a calculation, even if oftentimes a lot of these things, Sue, I don't know if this is what you're still seeing, is that even if you have a contract for a W-2, they can look at it. You've been offered a contract and you've signed on it. They're going to start you on September 1st, and they're going to pay you X amount as a salaried W-2 employee. They can already look at that and say, this person is, they can extrapolate where you're going to be in 6, 12 months and a year. Now with the 1099, unfortunately for them, at least in the lender's perspective, even though us as physicians, doctors, dentists, whatever we are, healthcare professionals, whenever they look at that, they're like, the way they think of like 1090, they still sometimes can group 1099 as the same as like standard independent contractors. So you're a person that is going out there and working a painting job on the weekends, gets a 1099 at the end of the day, or whatever it is. Like sometimes they group us with those people that have inconsistent incomes that are not paid by an employer. Maybe you run your own business, you get 1099, but they see that more as a risk. Unfortunately, lenders just blanket look at you as more of a risk because it's not a consistent income that you are promised by an employer. Now, unfortunately for us as physicians, we know that we have steady income. We might be a 1099, we might be a practice, we're promised this much, we're working this much. And so it's really important for you to work with the right lender who can understand the situation and be able to work with your however many years of experience that you have. And of course, the more years of experience you have with 1099, you can show consistent income, the better off you're going to be. But that's what causes some issues. And so making sure you write with the right lender that works with a lot of physicians is absolutely important. Sue, what else are you seeing when it comes to W-2 and 1099?
Obviously W-2 is fairly straightforward. I think you covered that pretty well. 1099s, I think, lenders, 1099 can mean anything. So it can mean that's exactly the amount of money that you're bringing home, no additional taxes to be paid. But typically, if you're getting a 1099, there are some things that you're paying for that the employer is not paying for. And it can range, it's a broad range. And so lenders don't know if you're, let's use the example of a $10,000 check. If, $9,000 of it is what you take home and, what you can actually bank on, or is it 10,000, but you have to take out for, Social Security tax, payroll tax, maybe you're paying for your own insurance. Many, many different things. And at the end of the day, you're netting, let's say, I don't know, $2,000, right? So therefore, lenders typically want to see a couple of years worth of income tax returns to see, what you're bringing in, what's coming out, and what you're actually netting. I think along those lines, if you are joining a group that's just 1099 for the ease of, I don't know, however that group is set up, you're not the only person in that boat. There's going to be every other person in that group probably went through exactly the same thing. And so I would say, if, either during the interview process or maybe even if after you've committed, go to the group and say, hey, so, I understand this is going to be my salary, or this is going to be, my guaranteed hours, or whatever it might be. But, how have other folks navigated getting a mortgage, as soon as they started working? A lot of times it can be a form letter that they might have on hand, right? Or something that they fax to the lenders. So, I think that it's, again, important to prepare financially, right? And get all these ducks in a row before you go out and start shopping for a house.
Yeah, that's a situation I found myself in. I mean, again, as a 1099 anesthesiologist, twice I had to ask for the heads of my group, I'd say, for letters that explicitly stated how much I was working, how much I was going to get essentially paid per, hour or unit or whatever value it was. And that was enough to satisfy the lenders. But again, there were some other lenders that just said, I can't do it. And then there were other lenders who were like, if you can get me the right documentation. And so it all varies, and it's crazy because you think it's one, we're all used to like standardized tests, it's the lending world is not standardized by any means. And so knowing that whether it's a big bank, a smaller bank, a local bank, regional bank, whatever it is, like there are variations, and it's really important to know what the products are out there. And so people like Sue and Deborah particularly just talk about this all the time and are experts in that area. So if any of you are starting to do some planning, you're getting closer. And I see some people that said within 12 months. I'd say right now is a great time to kind of reach out and make sure you position yourself well, because how you position yourself in the months coming up to actually applying for a loan can completely impact the outcome that you have. From like, where is your money being held, to what does that look like? All of these things are kind of things that we, again, if you read some of our blogs, we try to put some of those things in there. We'll put more tips in there as we go, and especially in our newsletters. We're trying to be more active in terms of trying to get you that content, because we find ourselves running into the same situations again and again. And of course, we get to tell people, but we're trying to do a better job of letting people know what's going on. And we appreciate you guys showing up today. This is kind of a start, an attempt for us to try to get more of this information out to people in a digestible, easy format, have a chance to talk to people directly, answer questions. We love doing that. That's really, again, our mission, our purpose is to get people really into their dream homes and just make this part of the process of their lives. Like, it's already stressful enough what you're doing. So we want to make sure this part of your life is smooth and easy, and maybe that'll create a great impact for you and your family. So you'll see more of this on your newsletter, on the newsletters and on our blog. And of course, if there's anybody else that you think could benefit from what we're doing here at Curbside, again, it doesn't cost anything. It's just something we're trying to add value. And if we've added value for you guys in some way, please let them know as well. Again, it's all curbsiderealestate.com. Again, we really appreciate your time. Is there anything else I missed here, Deborah, that maybe want to share with people?
No, I don't think so. We will follow up with an email with this recording, as well as if you want to schedule a call, you can schedule that through a link. We'll include that in the email. And then if you haven't received our physician's home loan guide, there will be a link there to grab that as well. And it has tons of questions to ask your lenders and, when you're interviewing them. But we're here if you have questions. We are available. So shoot us an email, schedule a call. We are here to help.
That's awesome. I mean, at this point, I think we've talked to thousands now at this point of physicians all over the country. Again, I think we're approaching somewhere around 40 states that we've worked in, something like that. And so we just love doing this. And so if any way we can serve you and help and provide value, just let us know. Okay. So I appreciate your time. Thank you so much. Keep those questions coming. We love talking to you, and we're here to support you. Okay. All right. Take care, everyone. We'll see you at the next one.
Bye. Bye.